Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include Bill Pulte's interest income, something everybody cares about, I guess. My interview with Ian Kimball on how originators prioritize strategic growth initiatives, operational excellence, and go about market expansion. And in the capital markets, what we're seeing with the secured overnight financing rate.
Today's podcast is brought to you by nCino, makers of the nCino Mortgage Suite for the modern mortgage lender. nCino Mortgage Suite's three core products, nCino Mortgage, nCino Incentive Compensation, and nCino Mortgage Analytics, unite the people, systems, and stages of the mortgage process into a seamless end-to-end solution embedded with data-driven insights and intelligent automation. See how nCino can support a homeownership journey that your borrowers and your team will love at nCino.com.
Economies and strategies impact various groups differently. Remember Mervyn's, Montgomery Ward, or a dozen other large department stores that are no longer? Saks Fifth Avenue is now rumored to be potentially joining them. Residential lending is obviously impacted by the slowing economy. If you want lower rates, the government shutdown is one way to negatively impact the U.S., GDP at least. Interest rates were a topic at the MBA annual, and thousands of lenders and vendors have headed home. Next year, it's off to Chicago. Some of the conference chatter was about how agency loans, normally bound for Freddie and Fannie, were being sold to aggregators. Whether intentional or not, the agencies are losing market share. Case in point, PennyMac reported good earnings numbers this week, with volume up 15% year over year to $36.5 billion. Chairman and CEO David Spector, a contributor to this commentary, said, in production, profitability nearly doubled from the prior quarter. The increase reflected strong recapture and our consumer direct lending division, combined with the continued expansion of our presence in broker direct as our partners increasingly recognize the value of entrusting us with their borrowers' mortgage experience. End quote. Remember when the Fed stepped in and bought agency mortgage-backed securities? It drove the price up and rates down relative to Treasury securities. Want to try it again? It turns out that amending the Preferred Stock Purchase Agreements, or PSPA, would enable the GSEs, namely Fannie and Freddie, to purchase up to $300 billion of their own securities backed by mortgages, as well as those of Ginnie Mae. The action would kick in when the yield spread between the 30-year mortgage rate and 10-year Treasury exceeds 170 basis points. Right now, the spread's based on credit differences as well as prepayment risk. So a couple mortgage industry groups are pushing for GSEs to be able to purchase mortgage-backed securities in order to bring down mortgage rates. The Federal Reserve has presented U.S. regulators with a revised plan to significantly ease a Biden-era proposal that would have raised capital requirements for major Wall Street banks. The new version could result in only a 3% to 7% increase in total capital for most large banks, far less than the roughly 19% hike proposed under the 2023 draft of the Basel III capital rules. These international standards, created after the 2007 to 2009 financial crisis, set capital, leverage, and liquidity requirements for banks. The earlier proposal had faced strong opposition from major lenders who argued it would restrict lending and hurt business operations. For today's interview, I wanted to welcome onto the show Click and Close's Ian Kimball to discuss how originators prioritize strategic growth initiatives, operational execution, and go about market expansion. He recently took a role as president of Click and Close, where he brings more than 25 years of mortgage industry experience, spanning strategy, operations, technology, compliance, finance, and sales. He was previously executive director of strategy at Service First Mortgage, and he's also held leadership positions at Caliber Home Loans, Bank of America, and Wells Fargo. I went and checked out the Click and Close website, and the tagline is revolutionizing everything mortgage, which sounds pretty cool. Before we get into your move specifically, can you give people a background on Click and Close and the opportunity that exists out there?
Yeah, absolutely. So as you stated, revolutionizing everything mortgage is a big statement. We're thinking big at Click and Close. And, the revolutionary part, I think, comes in a number of ways. One is product set. And so we've got some unique product offerings that meet the needs of some underserved markets. We do a really good job with a down payment assistance program that's got multiple different options or components to it. And then a consistent source of funding as well. So it's not one that runs out on an annual basis or on a quarterly basis. There's always funding for that. In addition to that, we've got a one-time close product that we've aggressively pursued in our wholesale channel. And there's really not many options out there for an OTC product across the board. And so we're proud of that. And we're considering expanding that into the correspondent channel as well. We've had so much success with it on the wholesale side, and we're extremely well capitalized with a strong balance sheet. So we think there may be an opportunity in correspondent as well. And then we do a lot of business in rural development. So our USDA product is strong. And I think that's one way revolutionizing the everything mortgage comes into play, is just really deep product niches. The second is technology. So Click and Close has a lot of proprietary technology. So from our own LOS, as well as we're developing a point of sale right now will be in production soon. Our own document management system, and that really gives us the ability to do things like embedding AI and machine learning into the LOS and the point of sale, and really going deeper with our partners and offering them a better experience. So that's kind of how I would categorize revolutionizing.
Well, you're very well versed for being pretty new, green to the role. And then maybe I should step back here and talk about your journey a little bit. Of all the places you could go, you've had a pretty interesting career in the industry. What led you to them?
Absolutely. I think I would go back to kind of what I was looking for as I was embarking upon trying to find the next chapter in my journey. And really for me, this is such a relationship business. It's all about the people, right? It's finding good people that have similar shared values that I do. So that was number one. And the next was partnerships. Click and Close has a lot of great long tenured partnerships, both from a business perspective as well as a community perspective. And so it's super important to me. Technology as well. We've talked a little bit about technology already, but that was very important is an organization and leadership that really is forward thinking from a technology perspective. Our business is changing so much right now. I really see it as a sea change environment when you think about everything happening from AI to source data to, kind of industry consolidations, things like that. And so really forward thinking was important to me. Sustainability was another one. The industry is such a cyclical industry that I was really looking for a team that had a business plan that was built to thrive in any market. And finally, my ability to help. I was looking for somewhere where I thought my skill set would be able to help move the needle, and really push the business forward and help it grow and scale and be more efficient at the same time. So with all that said, Click and Close really stood out for its willingness to innovate while staying operationally disciplined.
Well, it sounds like you're going to have to stay operationally disciplined, because that's a lot of different stuff you listed there. Revolutionizing everything mortgage is a big bucket to kind of latch on to. What are your goals in the short term, medium term, as you settle into the role? Where's your focus going to be with so many different objectives on the horizon?
Yeah, it's a great question. So for me, managing the business by data is so important. And so in the short term, it's really getting my arms around all the different components of the business. We're in multiple channels. And so, what metrics are we looking at to measure the consumer direct business versus the wholesale business versus the correspondent business, and being able to deliver that to our teams so that we can make informed business decisions that really serve our borrowers and our clients. So that's really the first, is getting my arms around all that data and being able to utilize that to push the business forward. The second is our partnerships. I think we've got a lot of really strong partners right now, but there's opportunity for growth as well. In the TPO space, there's a few very large players, and I think there's space for more. I think there's if you can execute and provide a really world-class experience to your partners, then there is an opportunity to grow in that TPO space. So partnerships are very important to me. And then continuing to look at that product set and make sure that we are addressing some of the affordability challenges in the marketplace and accessibility challenges in the marketplace by really being thoughtful about our product set that we offer.
Can you talk a little bit about some of these proprietary products that you're trying to put out there and what you think the real market advantage of having those are?
I mean, I'll go back to our down payment assistance program. So that's a product where there's either a forgivable or repayable second mortgage. There aren't a lot of options out there for this product in the marketplace beyond click and close. And so, that's one that we're really proud of and gets a lot of interest. Again, the one-time close I mentioned previously is a product that you see some depositories in that space, but there aren't a lot of independents that are offering a one-time close product. And so just being able to execute on the draw management aspect of it is critical, especially in a TPO environment. Those are the two probably largest.
Yeah, I wish you the best of luck going forward. It was a pleasure talking to you. So thank you very much, Ian.
Thank you.
Once again, there's not much to report for you on the economic data or mortgage rate front. U.S. Treasury bonds saw small price gains on Wednesday, ending close to where they started. The key short-term borrowing rate, that's SOFR, or Secured Overnight Financing Rate, increased slightly to 4.23%. Treasuries dipped early but recovered as stocks weakened, and a strong $13 billion auction of 20-year bonds boosted prices further in the afternoon. Sentiment was driven by reports that the Trump administration is considering a plan to restrict exports to China containing U.S. software in response to China's recent rare earth export restrictions. And surprise, surprise, jobless claims and Chicago Fed National Activity Index releases that were scheduled for this morning will be delayed due to the government shutdown. However, there will be some data points to digest, starting with existing home sales for September, and that will be followed by Kansas City Fed manufacturing for October, and Freddie Mac's primary mortgage market survey. Treasury will announce month-end supply, consisting of $69 billion of 2-year, $70 billion of 5-year, and $44 billion of 7-year notes, as well as $30 billion of new 2-year FRNs, before auctioning $26 billion of new 5-year tips. Despite the Fed blackout, Fed Governor Barr will speak on community investment at a tax conference. We begin Thursday with agency MBS prices slightly worse than Wednesday's close, the 2-year yielding 3.46 and the 10-year yielding 3.98%, after closing yesterday at 3.95%. Let's wrap up with a joke and some housekeeping. My dad's granddaughter asked me for a pet spider for Halloween, so I went to our local pet shop and they were $50. Forget this, I thought. I can get one cheaper off the web.
Thanks again to nCino for sponsoring this week's podcast. nCino's net mortgage suite for the modern mortgage lender includes 3 core products: nCino Mortgage, nCino Incentive Compensation, and nCino Mortgage Analytics, uniting the people, systems, and stages of the mortgage process into a seamless end-to-end solution embedded with data-driven insights and intelligent automation. To learn more, visit nCino.com.